Have you opened your email and seen a message from the income tax department and immediately felt nervous? I'm remembered of the earlier days when in those days communications were done through telegrams. And in villages, if a telegram goes, immediately people start crying because normally a telegram is associated with some death news. So they will not even open, without opening the telegram itself, they will start crying and making a big hue and cry. So that's only what is in past. But nowadays, you start getting emails. For many taxpayers, the word income tax notice creates instant fear. Some people assume they have committed a serious mistake. Some fear penalties and others avoid opening the notice altogether. This reaction is very common, and if you experience it, you are definitely not alone. Welcome to Tax Talk by TNC Sridhar. I am TNC Sridhar, and in today's episode, we'll clearly understand the income tax notices, why they were issued, what they actually mean, and how you should respond to them in a calm and correct manner. The first is the truth about income tax notices. The most important thing you need to understand is that receiving an income tax notice does not automatically means that you have done something wrong. In today's digital system, most notices are automatically generated. They are issued due to mismatch in data, missing information, or routine verification by the income tax department. This is what is called as confirmation of the information. The real problem begins only when a notice is ignored or handled carelessly. The common reason for receiving the notices is that one of the most frequent reasons is mismatch between the income declared in your returns and the information available with the department, such as interest income reported by banks or employers. That could be true, or there could be some similar looking name, or there could be some wrong pant fit somewhere. You might be getting a notice of that. The high value transactions like property purchase, large bank deposits, or significant investments can also trigger notices if they do not match with your declared income. The notices may also be issued if your return is filed but not verified on time, if deductions or exemptions are claimed incorrectly, or if the department simply needs clarification on some details. In most of the cases, a notice is just a request for information and not an allegation. There are different types of notices. Some are called as statutory notices and some are called non-statutory notices. The statutory notices are those which are statutorily required to be issued before certain proceedings, that is to be commenced by the department. For example, if your assessment have to be done by scrutinizing, they have to issue a notice before commencement of the proceedings. If they don't issue that notice and proceed with the assessment proceedings, the entire assessment proceedings can fall flat on its face as the statutory requirement has not been followed by the department. Some notices are simple intimations informing you of some minor mismatches. Others ask for additional documents and explanation. For example, you might have purchased some items and might not have paid for it before the year end. Maybe you may pay it in the next year. So you might have accounted for it in the current year, while the corresponding person on the other side might be accounting it for the next year. So this may lead to mismatch, but this can definitely be explained. Certain notices are issued for scrutiny assessments, while some are reminders for the pending compliances. Every notice clearly mentions the reference number, the section under which it is issued, an assessment year involved, and the deadline for response. Understanding these details is far more important than reacting emotionally. You are expected to respond and not react. Then comes the area how to respond when you receive such notices. When you receive such income tax notices, the first step is to stay calm, read the notice carefully, identify what the department is asking for, and check the assessment year mentioned. Verify the information in the notices with your own record. Always respond within the deadline specified in the notice. Never assume that the issues will resolve by itself. If you are unsure about how to reply, it's advisable to consult a tax professional rather than making your own assumptions. A correct and timely response often closes the matter without any further issues. There can be situations where the information called for by the department may not be readily available with you. Like, for example, suppose the department asks for bank account for a certain period. That period is not available with you, so you have to go to the bank and get the details. Suppose the bank also does not have the details. They may ask for some time. In that case, you can always seek time for furnishing of this information, but you have to respond, not just keep quiet and wait for the information to come where there can be a delay and department may take an adverse view of that. What you should never do, there are a few mistakes you should always avoid. Never ignore an income tax notice, even if it appears to be minor. Never submit incorrect or misleading information just to close the matter. Avoid panicking or assuming the worst outcome. In most cases, the tax notices can be resolved smoothly when handled with proper understanding and timely action. Suppose you find that a notice has been issued by the department on a person who has died. Maybe because the notice has come pertaining to a years which is more than 5-6 years back. And you have not intimated the department about the demise of that person. In such case, the very first thing you have to do is to respond to that notice and intimate that the person on whom the notice is addressed is no longer in existence. Support it with a copy of death certificate and also mention who are the legal heirs of these persons so that the department can think of acting in the right direction. If you fail to inform the death of a person, then department will think that the person is still living and proceedings may go on. And later on, if you try to take a stand that this person no longer existed, then you may not get the benefit of the fact. The key takeaway for taxpayers are that the income tax notices are a regular part of tax compliance system. They are designed to ensure accuracy and transparency and not to harass the taxpayers. Once you understand why the notices are issued and how to respond, the fears associated with them disappears. Awareness and timely action are the key to stress-free tax compliance. If today's episode helped you in understanding the income tax notices better, do drop your queries in the comments below. Like this video, share it with someone who is worried about tax notices, and subscribe to the Tax Talks by TNC Sridhar. In the next episode, we will discuss the topic that interests everyone, the exemptions and investments. We will look at it, what exemptions are available, which investments actually help in saving the tax, and how to plan them smartly. See you next Thursday at 12:30 p.m. Until then, stay aware, stay tax smart.